I'm Brian V, and this is Why We Work. Today, I have the great pleasure of speaking with Mr. Sean Tepper. He is the founder and CEO of Ticker.pro. He had many years of experience being a project manager, but he wanted to build wealth. And in his discovery of building wealth, he came up with Ticker.pro. And I want to find out, as a guy like me with not a lot of money, how do I get into investing? I don't want to become rich quick or find myself in a rich quick scheme, but I want to know how I can gently find my way into investing and what are some practical ways to do so. And I want to know what Sean has to say. If you would like to hear, take a listen today with Mr. Sean Tepper. I'm Brian V, and this is Why We Work. And as I just mentioned, I have with me today Mr. Sean Tepper. Good day, fine sir.
Hey, how's it going, Brian?
Very well. I just mentioned a little bit about you, but can you give me even fill us in a little bit better about you, and then I'll ask some questions about how it all began.
Sure. So my background is about 15 years in software engineering. In my first 5 years, I had a service business, and this is where I really learned what real work was like. And I was building my own business during the recession, and working a lot of hours, like 60 hours plus a week, and trying to build a business and pretty much survive. Managed to achieved some growth in 2010, just past recession. And my company actually merged with another company, which was great. It wasn't a big financial transaction, but it really removed all debts and liabilities. So in other words, it was a big win. But that was like an aha moment for me, where I really discovered that if you're going to build wealth and if you want to retire at all or even retire early, you need to create leveraged income. And one great way to do that is through investing. And what I did is I got into, because my background is tech, I got into angel investing. So I would either invest dollars or time into private tech businesses with the expectation that these businesses would eventually sell at a 10x multiple. Well, needless to say, that never happened. So I did that for about 5 years. And in parallel to that, I've done a lot of work with bigger business, like GE is one of the bigger companies I've worked for. And I kind of paused at 2015 and said, hey, you're not making any traction here investing in the private market. Let's turn your attention to the public market, the stock market. And I looked at this from a much different approach than a lot of people, because I knew the top investors that we all know, like Warren Buffett, Charlie Munger, Ray Dalio. These guys don't make consistent like 20, 25, 30, sometimes on up to 50% per year in the stock market by guessing, right? They're not using emotions. They're not using luck, which means they're using logic. So I kind of applied a software engineering tactic to the stock market and said, hey, let's figure out the math behind the stock market. And I did that. It took about a year to get on track. It was about 2015, 2016, and I generated about a 15% return that year. And that's when I kind of parted ways with my financial advisor and said, hey, you're getting me 6, and you're probably always going to get me 6, and I'm at 15. So I'm going to go my own way. And what I did is I kept refining that algorithm I wrote year after year after year. And I just have to pause here and say, I give all the respect to the investors that have come before me, because I really took this information from books and and kind of synthesized it into an algorithm. So the credit goes to them, not me. I just kind of put it all together. And I've been using this algorithm year after year to generate returns ranging between 15% on up to 50%, which if you do the compound interest there, that's killer returns, right? So things came to a head in 2019. I started talking to some large financial institutions, showing them what this thing can do. And one firm was like, hey, you've got something here, but you've got to test it through the 2008 recession to see if it's worth anything. And I'm like, okay, all right, let's see what I can do. And I was a little nervous, I have to admit. So I'm like, if this thing doesn't pass 2008, I got to go back to the drawing board. So here are those interesting results.
So at that time, you were able to reconfigure it to see what your program would have done if it was working at that time.
Exactly. It's a tactic called back testing. What you do
Okay.
is you take the historical data from back in time and you run it through the algorithm and see
Mm-hmm.
what it would do that year. So in 2008, the S&P 500 in the US, it went
Mm-hmm.
down 38%. Well, ticker that year would have had you up 24%.
Mm-hmm.
And then in 2009, S&P 500 went up about 23%. Ticker that year was up 72%.
And again,
And in
Ticker is the
2010,
program that you founded.
correct.
Yes.
Yep. And then in 2010, the market went up about 10 to 12%. It kind of leveled off a little bit, but ticker that year was up 96%. So I knew at that moment I had something. But just to be sure, I'm like, let's just test this thing for 20
Mm-hmm.
years. Let's go
Mm-hmm.
1999 so we can get the dot-com bubble in there,
Mm-hmm.
right? And just run it through 2019 and see what it does every year. Well, the results were fantastic. Lowest return was 10%, highest was 96. And that's when I said, hey, I got to turn this into a tool for others. I
Mm-hmm.
can't keep this for myself. So I started building it that was last summer, 2019. And I launched it in spring in 2020. So
Oh,
just
really?
after COVID. So it's
Your
live.
investor would be
Well,
calling you and saying, "Hey, hey, Sean, what can you do for me?"
right. Yeah, exactly. Well, here you go. Here's the tool. So yeah, it serves primarily consumer audience, anybody who's a self-directed investor or wants to use their own finances. It's what I did is, and you'll get a laugh out of this. A lot of lingo in the finance industry can be very complex and intimidating. A lot of $20 words, and it's all noise. Whereas what I've done with Ticker is use very approachable and layman's terms language, so it's really anyone can understand. So
Yeah,
it's
I was
less
on it
intimidating.
today. It is very consumer friendly, and I'm
Cool.
an idiot. So if I could understand it, anyone else could understand it. Before we get into that and how it can help people, and maybe you can explain a little bit more about it,
Sure.
Sean, take us back. What was your first job? Like, what got you on this track? Like, maybe you were only a teenager selling lemonade or something. What was your first thing?
This is a funny story. So I'm going into, I think, 8th grade. It was the summer after I was in 7th grade, and I picked strawberries
Nice.
for, here we go, for about $5 a day. And when I would pick strawberries, I would put in about 4 to 5 hours. So I was making like $1 an hour.
That wasn't too
It
long
was
ago.
just, what's that?
And that wasn't too long ago. You're not very old.
No,
So are you on
that
the,
was
where did you
90s.
grow
Yeah.
up to be picking strawberries?
Yeah, and I grew up in a northern suburb of Milwaukee, so a small
Hmm.
town called West Bend.
What
And
got you out of the house to go pick straw? I mean, it's a horrible job. I know my dear wife said she picked apples for a season, and it was one of those. She went the first day, was gung ho about it. Second day, third day, I think she said she was done. I mean, it's not an easy task, and I can't imagine strawberries or blueberries or anything you got to pick a basket full to make the money is not easy. What got you out to do that and
oh,
to keep doing it for a bit?
yeah, I just, you know, your summers during, the middle school years,
Yeah.
you're in this weird spot. Like you're not ready to be gainfully employed. You're
Hmm.
too young, but at the same time, it's like you only can play so many video games, right? So, or sports.
Yeah.
I was a baseball player as a
Yeah.
kid and a swimmer, and I'm like, all right, I want to work a little bit. I want to make some money, right? So that was really the motive. I hated it. I hated picking strawberries, but it was a good experience.
So into middle school, high school, were there some things that you did that directed you, or what directed you towards IT, for instance?
I really fell into that by accident. So here's a fun story for you. So in high school, I wasn't or most of my life growing up, I wasn't the most focused student, and I was never stimulated. I'm not a big fan of, I respect school, but I don't like sitting, staring forward and being preached to.
Yeah.
I like, give me tasks. So I got by with A's, B's, and C's without studying, but there were there were a few classes in high school that really turned me on to tech, and that was computer aided design.
Mm-hmm.
And I was able to design like blueprints of manufacturing components on up to structures, buildings, I think like homes, like in
Mm-hmm.
building a home blueprint.
Yeah.
And I had a cool experience where there was a home builder, a pretty well-known home builder in my town where I grew up. He approached my teacher and said, "Hey, I want one of your students to come under my umbrella and be my architect for the year. And I'm not going to pay him. I just want to give him experience.
Mm-hmm.
And in return, I'm going to get an architect." Because he's like, I don't want to pay some architect,
Mm-hmm.
tens of thousands on up to $100,000 to do blueprints. He's like, I'll just coach some kid. And my teacher, I was one of the star students. He's like, well, you got to use Tepper. He always called me Tep. He's like, Tep's your guy. You can use him. So I actually got to skip class all year, and I would focus on helping this guy building his blueprints. And we did an iterative process. So every week he would give me tasks, and I'd go home on my computer and I'd update these blueprints and then come back to him, and we just revise and built this beautiful home.
What
And
a
I'm
great
like,
opportunity.
oh, it was awesome. Yeah, it was sweet. So check this out. So I built this home, and it was kind of crazy. It was like an 8-bedroom, 9-bathroom home. He had, his business was, I think, in the family for a few years, so he could afford a home like that.
Yeah.
And I thought, oh, this is the coolest thing ever. So I decided I'm going to go into architecture in college.
Mm-hmm.
So the computer part nailed, but I get to architecture, and this was kind of like a punch in the face.
Mm-hmm.
You had to be good at model building in school as well as drawing. And there was this particular moment where you'd go to these halls, like a huge hall, huge room that would show these stands and everybody with their models set up. And I built this home that was pretty modest, and I get in there and I look down the aisle and I see the Taj Mahal, I see the White House, like built to pristine detail, and I look at my home, I'm like, oh my God, this is embarrassing. So I made the call, and just to back up a second, the professors are saying you have to be in the top 5% in architecture school to even find work when you graduate.
You're
And
looking at your model going,
oh my
maybe
yes.
not me.
Yeah, exactly. And I'm sure I could have pushed through, but I'm like, and I'll share something with you really funny in a moment, but I knew at that moment I'm not in the top 5. I could really work hard to maybe get in the top 20, maybe.
Mm-hmm.
But I said, let's switch careers. So I was turned off by school, but I still value a degree. So I actually picked up a fine arts degree. I'm like, I want a degree that's really easy to get, but still gives me 4 years,
Mm-hmm.
that 4-year bachelor's. So I went in fine arts, and I worked a lot during college so I could reduce debt. I actually graduated with no debt. But then the funny thing is, ironically, one of my friends who's an architect, I told him this story. Like, he had to be good at model building and drawing. He's like, Sean, I'm a professional architect. Do you know how many models and how many actual drawings I've done in he's my age, so 15-year career? I'm like, how many? Yes, 0.
Maybe the professor's just trying to discourage people. Like, you had it down. He's just trying to weed people out so he doesn't have to mark papers or something.
That's right. Like, oh, this is easy. This kid's out the door.
You got to be in the top 5%. Everyone drops out. That's pretty funny, though. It is true. So you got yourself into IT based on some of life choices thereafter. Before we get into what you're doing, and you mentioned it because you wanted to get the education, wanted the 4 years. How much do you value education? I listen to like podcasts and other people saying, well, just find a passion that you love and go do that. And it works for some people. But how much do you value the education you had, even if you didn't, in the end, focus in that, architecture and all of that? Do you find that you've used that through your life, or it was just big waste of time and you should have just made programs? from middle school?
Good. I love that question. So my parents were really good about instilling me just get a 4-year degree. It's a ticket to get, better jobs. And I shouldn't say it like that because these days, like blue collar work, like electricians and
Mm-hmm.
plumbers and even carpenters, they're in high demand. So those careers are amazing, but I'm glad I did it. In hindsight, I would have probably went for finance because that's what I love. And I didn't
Mm-hmm.
know that, but I got my 4-year degree, and it was a great idea because I actually used that 4-year degree to fall back on several times to get jobs,
Yeah.
IT project management jobs in corporate America. And that's not, some people can really frown upon that, but I've worked for GE, I've worked for Kohler, they're a private company. I've worked for sort of some other bigger orgs as well. And I always tell people, don't just learn your job. If you get in corporate America, learn the business. Because that's what I did every time. Like at GE, like how do they write contracts? How do they negotiate? How do they market? How do they build operation processes? Like I wasn't in there to do my job. I was there to
Yeah.
infiltrate and learn how the business runs, because that is like worth its weight in gold. You can't learn that in really a small business. So
How,
thanks to my parents, getting that 4-year
they
degree has paid
instilled
off.
that. Yeah, I mean, even
Yeah.
if it's a trade, right? Like that's the type of education that I'd like to
Mhm.
promote too, in saying it doesn't matter what it is, education is important, opposed to people saying it's not important. Because even if you have no education, you get a job, you're still going to have to learn something once you get on the job. They're going to
Mhm.
teach you something. It is an education, whether it's on the job training. You mentioned your love or desire or passion for finance. Were you good in math? Was it just something that
Yeah.
came natural to you, or how did you develop that? Because when my thing is, as I told you when we first started talking, is, oh no, I feel like I'm out of my league here talking to a finance guy. How did you step up to the plate to be that guy? And is it really that difficult for people to learn, and especially when
No.
we talk about investing?
Right. No, I will say that I was not a star math student in school. Like that's the one class I probably had to work at.
Mm-hmm.
And I just never really focused that hard on it. But when I got into tech, after I graduated, I created a business that was building websites and software. And you don't need a whole lot of math. And I learned that, in the world of investing, it's not complex math either. It's
It's like
you
not
just
really having to, sorry, not having to build models and draw pictures. Like, it's the
yeah,
thought that's
right.
what you need, but in the end, it's not what you use.
Not really. It's creating the algorithm, there was some calculus there, but
Hmm.
it's if you're somebody who's using Excel, like my background is mostly IT project management, so in the software engineering space, and you're doing
Hmm.
a lot of projections and calculations and forecasts. So Excel is like your go-to. And if you have like a year or two experience using Excel, like applying those same skills to finance, it comes pretty easy.
So now that you developed your program, you enveloped
Hmm.
Ticker, and what is it you hope to do with this? So I guess even backing up, you touched on it about realizing investing is important. If someone is
Yep.
listening, and even myself, why would you say, or how did you come to realize investing is important first and foremost?
Hmm. Well, let me share a statistic with you. So in the United States, 70% of Americans have $1,000 or less in savings and investments combined. And there's other statistics behind that 70% of Americans will not be able to retire in their 60s. So we definitely have a major issue, especially in the United States. I know it spreads to other countries as well, that people are, one issue is they're spending too much, right? They're buying things and stuff, but there's a flip side to that. They're not investing. And unfortunately, the 6% that a lot of advisors, and I have nothing against because I have friends who are financial advisors and
Yeah.
wealth managers, I respect 6%, but unfortunately, it's not enough to retire. If you want to retire in your 60s, you have to increase that percentage. So my goal is to make investing more approachable
There's
and
something in my
easier to
head
understand for people.
there's something in my head that's sticking that I don't know who I heard it
Hmm.
from, but if you're only getting, and like I said, I'm not a finance guy, if
Hmm.
you're only getting 6%, that doesn't even cover inflation and like you might be able to fill in some other terms. Like that is not enough on any particular investment to have something substantial at the end.
Right, because inflation is about 2 to 3% per year. And if you pay an advisor, they're taking what's called 1% AUM. So in other words, they're taking 1% of your portfolio. So
Three
let's do the
plus
math here. At
one.
6% minus 3% inflation,
I can do that.
minus another percent for management. You're making about 2 to 3% per year. And that's unfortunately the reality. And people just don't think about that. Um, you're you're better off doing that than putting in a savings account at
Mm-hmm.
0.03%.
Mm-hmm.
But that's why a lot of people, unfortunately, a lot of people do this is they get into their 50s and they start looking at their investments and start thinking about when they're going to retire, and they are
Uh-oh.
way behind the 8 ball. Yeah.
Uh-oh.
Yeah.
So in understanding that statistic that 70% of people
Hmm.
do not or only have $1,000 approaching 50s and
Hmm.
60s, what should someone's first step be? Like, I mean, when did you start investing? At what age did you take it seriously?
Yeah, that was around the age of 29, 30. When I sold that, I had that service business just past the recession. And that's
Mm-hmm.
when I knew investing was, the power of compound interest is, Einstein has stated it's the most powerful force in the universe. And no joke, like when you start using that to your advantage, you can make some real money.
Can you define
And I
compound interest in layman's terms? Like, I understand it's this upon what you
Sure.
just invested, but I'm sure you can do a much better job.
Yeah, so I'll give you a math example. So let's say you have, um, I'll use a number like $1,000,
Mm-hmm.
and let's say you make 15%. You know, that first year you now have $1,150.
Mm-hmm.
Well, now you take 15% against $1,150, and that it just exponentially grows. So when you look at it at a small number like $1,000, doesn't seem like a big deal. But when you can start to get to like you've got six figures in the bank and start using, compound interest, your money grows really fast. So let's go $100,000,
Yeah.
right? There you go at 15%, or even let's go a number like Ticker's return for me 50% per year, $100,000. You just made 50 grand by not working at all on that investment. Now take 50% against $150,000. It grows exponentially. And I actually have calculators in Excel that show the differences side by side at 15%, 20%, 25%, 50%. And if you start, this is crazy, but over the course of 20 years,
Mm-hmm.
if you can make 50%, and I think your starting amount is 10,000, give me close to $1 billion at just 50% compounded interest over, I think it's 20 years.
I think the knee-jerk reaction of some people or myself
Mm-hmm.
with investing was as it's not compound just based on the principle that you're just going to get the percentage on the principal that you invested. So $1,000, you'll just keep getting, whatever the percentage was, 6%, 15% on the
Mm-hmm.
$1,000. But compound interest, you keep adding it up and it builds like a snowball. And that's where
Yes.
the money maker is if you're patient to leave your money in, say in this case, in the
Yep.
stock market.
Yes, exactly. Yep.
Sean, how so if someone realizes they need to invest or it's wise to invest, whether it's for themselves or for a family member or a spouse, like
Mm-hmm.
obviously family, but for their children or for some other reason, how does one usually take the leap from, okay, I think investing would be good to, or what would the next logical step be? Would you say it's okay, first should be the stock market or first, have $1,000 and, just save up $1,000? Or what would you say would be the first, they start with nothing or at least no plan. They might have some
Mm-hmm.
money, but what would you say would be wise to start off the road into investing?
Yep. Yep. So start with 1,000. And if you actually, I'm being biased here, but as I designed Ticker to do this, is it actually, when you join, you get an introductory email, and then it lets you know there's going to be 20 other emails over the next 20 days. And they educate you on what to do with their first $1,000. Tells you which broker to use. Like I use TD Ameritrade.
Mm-hmm.
You could use Robinhood or E-Trade. Foreign
And you
investors have other
suggest the ones
platforms.
that have no commission as well.
Correct. Exactly. Yeah. And it actually walks you through to safe investments.
Mm-hmm.
And that ticker has a score from 0 to 20. And not only, we could go into this in detail, but in other words, people are all about, they want to reduce risk. They don't want to take risks that they lose money. Well, Ticker's point system has the higher the points, the less risk, the higher probability of making money, making return. It actually guides you through that process. So you could literally start with $1,000, get started, and just follow these emails. And over the course of 20 days, you're going to be more educated and well-armed and dangerous with investing than most people, like most investors, because I really broke it down in layman's terms over those 20 days.
And just because this is a question in my mind,
Mm-hmm.
your finger is not behind a computer going, okay, I think this is good. This is completely based on your algorithm, which has proven itself over decades.
Correct. Yes, exactly. And I'll give you a little peek under the hood of how it works. So Warren Buffett's teacher was Benjamin Graham, and he wrote a book called The Intelligent Investor. And he's kind of the father of what's called value investing. Value investing is figuring out the real value of a stock. Like, I'll give you an example. I like Microsoft. Microsoft is around $200,
Mm-hmm.
and $200 is the actual stock price. It's not the real value. The real value is called intrinsic value, and that takes some calculus, but Ticker does that for you, determine what the real value of Microsoft really is. And what you want to do is you want to buy a stock that is 50% off the intrinsic value. So let's use Microsoft. If the real price is 200, but the value is 400, there you go. It's 50% off. And that was used for decades and decades. People just use that. But I want to step further based on some inspiration from a guy I really respect. His name is Phil Town. You could Google him. He's got 2 great books out there. One is called Rule 1 Investing. The other one is called Payback Time. And he helped guide me a little bit on my process, but he kind of created some other metrics, like you want to pay attention to the debt to the company, how they're allocating capital, what their sales is. And I'm like, you know what? I'm going to take all those other variables. I'm going to create a point system. What that does is the point system is really showing higher points, stronger financials of the business. And of course, if you're an investor, you want to invest in a business that has strong financials, because the probability of that business continuing to make money for you is very high. So it's got that margin of safety combined with the points. And that's why I used Ticker for 4 years before I even launched it, because I'm like, this can be a scary game for people, but I got to continue to test. And I'm not kidding you. Thousands of tests I ran just to make sure I'm making money, because I don't want to put this out there and somebody invests money. Yeah. Now they're losing money. Guess what? My email inbox is getting lit up like, Sean, what are you doing here? I didn't want that.
So you're saying then the first step would be to go to the stock market if you have the ability of investing $1,000. Is
on your own.
Do you have any warnings for people? I mean, not the volatility of stock market, but just to be aware of being responsible and making sure they're on the right path or making the right steps. Do you have any warnings for someone to make sure that they're in the right frame of mind to do so?
Yes.
To start investing? And I'm not talking about the stock market. I mean, you get COVID, you have the recession, like we can't beat against that. I mean, you can have a good algorithm, you can have a good program, and it can move through it unscathed. But just the thought of someone never investing, maybe not even having a home, maybe, not having paid off their cars, not put away any money for school, maybe have debt from school, but just realizing investing is important, but just make sure, do you have a warning for them?
Yeah, I have my own tagline here. And it's emotions. Emotions are the enemy of investing, and that's the one thing about investing is if you're a highly emotional person, it might not be for you, because there's days where the stock market can go way up and there's days it can go way down. You have to have the ability to separate yourself from those emotions and trust that in the end, if you look, and I've studied the stock market the last 100 years, history repeats itself over and over. What goes down always comes back up. In general, the market does that. And you have to just trust that.
I I have a friend here, and I won't divulge more than that, but I would go visit him, and on his desk, he is not an investor. He's of a other profession, but he has three screens. I would go, and he was investing in the stock market, and you could see
Mm-hmm.
all of whatever the
The
tables that are before
charts.
him, and I was talking the charts, and I was asking, "Oh, so you're in the stock market?" He's like, "Oh, don't do it. It's so addictive." And like, so he would be not neglecting his job. He can't for the type of job that he
Mm-hmm.
has. But he just was so into it because he was watching up and down and up and down and trying to play the game in probably how day traders do, and not being more
Yep.
patient and not waiting, which, I mean, you probably could do both on your program. It's just, buy and sell as much as you want, or with a broker. But it can
I
be
have
addictive too.
Yep, I know exactly what he's doing, and that's not what Ticker does and not what I do, and he is trading. So
Hmm.
there's a sign if somebody's watching charts or has multiple screens. Now, in my email is sequence, when you join, it actually breaks down the differences between trading and investing. Now, here's a question for you. How many billionaire investors do you know? You could probably think of a few, right? Warren Buffett comes to
Know
mind.
of, yes. No, personally, I don't. But
Right.
yeah,
Right. Not
yeah,
right. You don't know him personally, but you know of, right?
yeah.
Then I turn that question to how many billionaire traders do you know? I know the number to that, and I think you know where I'm going. That number is zero. There are no billionaire traders.
Hmm.
So then I go a step further and I talk about the email sequence. Trading is a job, like any other job. If you're
Yeah.
working your job like me, past experience, corporate America, or you're a landscaper, you have to be spending 4, 8, sometimes 12 hours a day. Whereas investing, and
Hmm.
this is going to sound crazy, with a tool like Ticker, you only need about 15 minutes per week. That's it, because it's not you working for money,
Yeah.
it's money working for you.
Ticker's
So
working for you too. Yeah.
yeah, I love talking to traders because I will debunk and break down, and I'm not contentious, but I
Uh-huh.
pretty much reveal like what you're doing is waste. And even my tax guy, he's got this is a fun story for I have to share with you, and this will teach a lesson to people
Yeah.
out there. My tax guy, I won't give the name away, but he's like one of my customers fell into some family inheritance, and he's been trading the last 10 years. This last year, he made $4 million, but he lost 3.8 million. So his total profit was $20,000, and he
Hmm.
spends about 30 hours a week. And then he's like, you know what, Sean? This was the first year out of 10 years he actually made a profit. The previous 9, all in the negative. He's like, if he would have taken that family inheritance and used Ticker and just invested, he would have been, I mean, so much better off. I can't imagine how much money he lost, but if he made $20,000 and he's proud of that after 10 years, that's pretty disgusting.
That's pretty brutal. What do you find most difficult? So in what you do in the run of a week and a day, what is difficult about
Mm-hmm.
what you do? I mean, especially changing from project manager into this present position, and you also have a podcast. What is most
Yep.
difficult about your days?
Um, I would say my strength is, I want to show that strength and then talk about
Yeah.
the weakness. So my strength is I'm really good at operations and efficiency and systems. So I can quickly figure out what's waste or minutia in a day, what doesn't produce value for customers and what doesn't generate revenue. I can get rid of that. But on the flip side, my biggest challenge, and I'm always learning, is marketing. I'm not, like running Facebook ads and doing online marketing, because touching people's emotions, I have to get like ongoing coaching, always talking to people, researching and learning how to write copy that is, it touches on emotions. Because people, when they come to a platform like Ticker, they're not thinking logically all the time. There's emotions in play, and I need to ease those emotions and make them feel comfortable and understand that, hey, you can trust this. So that's my biggest challenge, is I have to continuously coach myself on that. Very left brain that way.
So probably feedback that you get, it brings you some satisfaction, but what is it that does bring you the most satisfaction in founding Ticker and seeing it off the ground? And not not a year yet, but I'm sure you have some success with it.
Yeah, I'm always asking my customers. I'm really good about surveying and asking, what would you do different? What would you add? And one thing I learned with a tech business, it's not you that's creating this tech business, it's your customers. And that it's your ability to ask questions. Like, I'm always asking, what features would you add, or how would you improve this? And I've been taking those, adding them back to the site, and the testimonials I got from just doing that have been worth its weight in gold. Is just to hear people say, hey, you did exactly what I wanted, added to the site. I love it. Just simple as that. It's been awesome.
Sean, in the few decades that you've been working, what do people not understand about what you do? And for me, talking to you, I said I feel overwhelmed. What would you like people to know about what you're doing and even what you're trying to provide, so that they can understand you better and maybe appreciate what you're doing that is actually a benefit for them?
That's a great question. I would I would say that investing is, and this relates to a lot of things in life, it's a lot easier than you think. And to take a step back, when you're investing in businesses that have proven themselves to do great in the past, and the likelihood of continuing on that path is usually very high in most cases. And you just got to look at it that way. When you're investing in a business, you're buying stock, you're buying great businesses at a great value, and you're trusting in that business that is going to continue to go up. Um, and it's really that easy, seriously.
You say easy. And I look at your career highlights on your webpage and hearing some of the things you do, like you are motivated. I mean, I don't know what
Mm-hmm.
keeps you going, but how do you stay productive? How do you stay on? Yeah, I mean, with your podcast, you even mentioned you have another interview coming up soon, and like you're obviously on the
Mm-hmm.
go. How do you stay productive and keep working and keep striving for what it is you're trying to attain?
Yeah, it took me a long time to find a passion that was both something I was passionate about, but can help a lot of people. And if you can find that sweet spot, that is like motivating in itself. Like, I was always motivated to work and really driving towards early retirement. It's always been a motive
Mm-hmm.
right after
Mm-hmm.
graduating college. Like, I want to retire early because I have tons of hobbies, and I love traveling, and I love sleeping in on a Monday morning and all that kind of fun stuff. But it's like, once I found like, hey, I've got something here that can help a lot of people and I'm passionate about it, just like that mission of just helping people, drive towards retirement and take control of their finances and put themselves on the path to early retirement. That has actually become the highest level, thing to look at. Like, hey, that's the goal. That's what the focus is. So that's really my key driver
Keeps you
now. And
productive. Yeah.
yeah, the podcast is all about financial independence. So I interview people who maybe they haven't achieved it, but they're well on their way. So they created some kind of revenue business model that's reoccurring or leveraged income, and really unpack their story, kind of what you're doing. So it's more approachable and easier for people to say, hey, I could do that.
Yeah,
Right.
your podcast, Payback Time.
Yep.
It's very well done.
Oh, thank you.
What is, because you're an IT guy, and some people that
Mhm.
I ask this question to get a little convoluted in thinking if it's a singer, it's their throat or their mind. But what's your favorite tool that you use? Something that you can't really do without in your work.
Yeah, in the world of project management, I use Trello, which is
Yep.
it's kind of like for Scrum, right? Or which is essentially you put tasks on a board, assign them to engineers, and you move them through the process. If I didn't have that, I'd have to get creative and use Google Sheets or something online. But software engineering is a big part of my worlds, and I need continuously output. So that Trello tool keeps my software engineering team focused and efficient.
You're obviously a worker, and you may lean towards giving financial advice, which is perfectly fine. But what would be your top tip for people getting into work, or even as you did, changing careers? What
Mm-hmm.
would be a top tip? And it could be an investing tip, save your first $1,000 and get Ticker, right?
Sure.
But what would be for my listeners, of why we work and what motivates people to work, and understanding and promoting the idea of work? What would be a tip for people just getting into work or changing a career if they're disgruntled in their job or just find it's not really their passion?
Yeah, let me share an interesting statistic for you. I want to talk about the work component. So, and I was part of this. There's a stat out there. I have to look at the sources, but it's about 80% of the people out there working, and this is especially in the United States, 80%, it's not dislike, it's actually hate what they do for work. That's unfortunate. And
It's
there's
pretty
numerous
strong.
problems there, right? Right. And there's components there. Could be management. It could be what you do day to day isn't stimulating. And the only way you're going to figure out something you're passionate about is you unfortunately have to keep that job, but you got to start to read and try and do stuff on the side, and do stuff that you like, but figure out how it provides value to others. Because if you can figure that out, you can turn that hobby or interest into a product or service.
Mm-hmm.
And that's like that sweet spot. But the only way to do that is you got to be reading and like kind of trying and playing around with stuff. And you hear, I'm sure you've interviewed people, they're creating something fun or doing something fun and realize, oh, people want that as well. And then it turns into a business like that. And I love stories like that.
I
But
love
it's,
how you say it, because I find a lot of people will say, well, just quit your job and go do something else that you love.
I don't know.
What you're saying, read up on it, find this niche of the corner in your heart that you can put a spark to while you work, while you're paying the
Yes.
bills, right? And that
Yes.
is very, very important, especially from investors' perspective, right? Like,
Yeah.
keep the money coming in and don't throw.
You will thank yourself over and over, even though those years of doing that job was painful, that continuous stream of income into your investment account every month. And that's why I tell people, you just set that up if you can, as young as you can, and just get a job, whatever it is. But that's what's most important. It's hitting your bank account every single month. And if you're using compound interest, you go 5 years, 10 years. And that's maybe when you start your business, you're going to look at your investment account and be like, oh my gosh, I'm so happy I did that. Because there's a lot of people that don't.
Well, that's going to lead into my next question perfectly, because I know you started at 30 or 29, 30 of investing,
Mm-hmm.
and maybe you may give another answer, but what do you wish that you knew? And maybe if it's investing, and when would you have started? Right?
Oh my God, I love this question. So I wish, like graduating high school or even in high school, I would have known the power of investing, because I would have focused a lot more energy and money on investing. In fact, I'm not bragging. I'm just saying here that if I would have known at age 18
Yeah.
how to invest like I do now, I would have
Or if
for sure been,
anyone knows at 18 now.
yeah, I would have for sure been retired by the age of 30, for sure.
That's what a lot of
Um,
investors say. I mean, it's not just people who know about compound interest.
yeah. And it's not because of a high paying job. It's because of, compound interest. It is ridiculously powerful, but sometimes it just takes, years of trial and error and this and that and failures, and then realized that, hey, this compound interest thing, it's kind of cool.
Sean, what was the biggest mistake that you've learned from that you were able to take forth in your young age?
Yeah, so I do have to share this story. I'll try to condense it, but when I sold my first business and then got into the tech world and angel investing, there was one idea that I came up with. And the concept was, you know how Groupon would take 50% of like a restaurant's profits? They would run a Groupon deal. And in the service businesses, like a restaurant, they would take a loss. It was called a loss leader. So Groupon, as you know, in like 2009, 10, 11, 12, and there are a lot of other businesses like it kind of popping up and growing like crazy. It was a great tool to bring customers in with the hopes that those customers keep coming back, because that's where these businesses would make money. But a lot of them lost money. So a buddy of mine and I came up with an idea. We're like, what if Groupon was a model where the businesses kept 100% of the profits, but they only paid a monthly subscription, like of $100, no matter how much they made. They could make thousands of dollars a month. And people were like, are you serious? Like, is that a thing? Like, we'll give you money now. So we were selling subscriptions to this thing. We call it Pointfall because there's a point system in it. And we're selling subscriptions pre-launch, hand over fist, super easy. And we even got a $2 million verbal buyout offer. I guarantee it would have never gone anywhere if you would have went to the negotiation table. But we were like, our heads were in the clouds. We're emotionally invested. And we're like, this is going to be $1 billion business. The problem is when we launched, and this was around 2013, and at this point, I quit my full-time job and I went all in, like thinking this is like, I will work off savings.
That doesn't sound like the same advice you just gave a moment ago.
Nope. This was a pivotal point in my life, but I'll share a fun lesson here. So we launch and it was crickets. And the issue is this is a marketplace site. The marketplace site is when you have two audiences. You have the businesses on one side paying a subscription. Okay. But we didn't have any consumers. So then we went into venture capital mode, which is going after investors and saying, hey, here's our model. We need a ton of money to spend on advertising dollars, Facebook and Google, to bring consumers in. And a few investors were like, pass, hard pass. There are a few that were like, this is a great idea, but you're about 4 years late to the party. And at this point, I had burned through all savings. I've gone into debt. And this was the necessary moment in my life that needed to happen, because I told myself, I will never become emotionally invested in a business or an investment in my entire life. And although it was painful, it taught me that. So I'm not kidding you. Like with Ticker, payback time in any individual investments I make, no emotional attachment. And I'll say something here that is very contrarian to a lot of people's thoughts, is people can say their business is their baby. And that is like the stupidest thing ever. A business is a tool for good or a tool for bad. Yeah. It's your choice what you do with that tool. A baby is a human being. Know the difference. So seriously.
I mean, it's so now with advice, yeah.
Right. So now with investing, it's that simple. Like I just rely on the logic of Ticker, and just let those investments, they're going to, in most cases, they pretty much grow, but it's separating the emotions from the equation. So if anybody in business, I tell you, don't get emotionally wrapped up in your business.
That's great, Sean. I know you're pressed for time. Do you have anything else, and especially not people just getting into work, but to encourage people in their work? What I like to do with Why We Work is, I know someone who didn't have a job for a long period of time. I kept talking to them, talking to them, and then they finally got back into work. Or another person who was very dissatisfied with his job. And then he went and found something that he said, I wish I should have been doing this for decades. And then he found, and those types of things to encourage people in their work. Is there anything you have to add on that?
When you're in a tough position, like your day to day, if you don't love your job, if you're one of those people that hate your job, It's tough. It's tough to go to work. It's tough to do your job. But I stress, if you want to create something, like if you want to create your own business, you want to be an entrepreneur, if you want to build wealth, um, I do recommend don't focus your energy to do your job. Like, do your job, yes, but learn the business.
Mm-hmm.
You're inside a company, ask questions, jump in meetings, um, get involved with different groups of people within, and just be a sponge and take in everything and how that business is run. Because I've done that with so many businesses I've worked for, and it's like a great majority of that information I can apply to building now a tech startup, Ticker, today. But if I didn't do that, I'd be kind of running blind.
That's even some of the, regular jobs that you hear about. People are not doing that. They're not
Right.
putting themselves completely in the business, finding out, and they're just, accepting their job as is. Oh, this is horrible. But, there is management jobs they can move up to, or different areas that they can move to. And if they're not thinking of that, they just think it's a dead weight job, then they're bringing that attitude in, even bringing it home as well. And that makes it worse. Sean Tepper, how can people reach you? How can, and your website again as well for Ticker?
Yeah, I'll give you two locations here. So I'm very active on LinkedIn. You can just type my name, Sean Tepper, in there. And then Ticker. Go to ticker.pro, which is spelled TYKR.pro. That's it.
Sean Tepper, I have one more question for you. Why do you work?
We got a long pause here, but there's a lot of reasons. I want to give you one good one, and that is I really love teaching people how to save for retirement and put themselves on the path to an early retirement. I love that.
It's, I think if we boiled down, I don't know if we have any statistics on it, but the one of the biggest battles in a household would be the insecurity of the future financially. And so if you could do that to help people, you would stop a few bouts in a house if people could have that financial security of knowing that they have a plan.
Yes. Yeah, I would agree to that.
Perfect, Sean Tepper. I appreciate you and your time. You've been a great guest, and I'd like to talk to you again in the future.
Awesome. Well, thanks for the time, Brian. I appreciate it.